Hey guys, what's going on? Memes here. So let's talk about oil prices because something something strange is going on. Let's uh, let's go over to our other screen now. Oh wait, what's this? Yeah, this was from about an hour or two ago. This was for oilprice.com. As you can see, this page isn't working. Oilprice.com is currently unable to handle this request. HTTP error 500. Oh, well, that's concerning. Well, fortunately, it is back up right now. Let's go to oilprice.com. As we can see here, oh look, Middle East Mayhem could send oil to $100. That is not the case. Let's actually go on their page. Oh, what's this? China doubles rate of crude stockpiling as oil falls below $0. Yeah, for the first time ever, we've gone negative. So let's take a look at our first article here. First article here is brought to us by CNN.com. Thank you, Mr. Anderson. And as we can see, American oil crashes below $0 a barrel, a record low. Huh. What's going on here? So, as you can see, from London, CNN Business, the spectacular collapse in oil markets is showing no signs of easing as the coronavirus crisis saps demand and producers run out of places to store all their excessive barrels of crude. So, if you've been following the market at all, we saw oil basically dip to around $22 a barrel, give or take, kind of hovered around there, and then recently today it seemed to crash, and this is highly concerning. Why is this? So if you've seen any of the videos of, like, for instance, dairy farmers, they seem to be dumping milk. It seems like a complete waste. Well, why are they doing that? Here's the thing. It's okay, you might have the milk, but if you don't have schools open, if you don't have a lot of these restaurants and everything that purchase it on a very regular basis, if they're not going out there and consistently getting it, well, if they don't have the demand for it, you typically don't just sell raw milk. I've drank some raw milk before, but that's usually through like little like local co-ops and farmers markets and stuff like that. Because if you get raw milk, you got to pasteurize it. So you got to send it over there, have it be processed, and then have it be bottled, then have it be delivered. So whether we like it or not, that's why we see a lot of folks dumping it out. And as far as I understand, cows typically need to be milked on a daily basis. I don't know if we need to milk the planet on a daily basis, but here's the thing. We're running out of places to store it because, as we've seen before, if folks are driving on a regular basis, then you are using all this fuel. Okay, we have the oil. We get it refined into gasoline. You get your gasoline and stuff, and if you got millions and millions of vehicles on the road, and we're using petroleum for all these different processing of different materials, this, that, and the other thing, if we all of a sudden shut a lot of this stuff down, well, now we got excess crude. Even President Trump, about a week or so ago, said that we basically filled up our national strategic oil reserves as well, because, I mean, it was cheap. Well, maybe we should have waited a day or two. I don't know, because he was partially doing that to try to prevent the collapse in the price of oil. But if we have all these producers still literally just pumping oil out and everything, yeah, it's crashed below zero. So as we can see what's happening, U.S. oil prices plunge, falling below $0 Monday to negative $37.63 a barrel. That's the lowest price ever since NYMEX opened oil futures trading in 1983. I believe that's the futures fund for different commodities and everything. As we can see, the sell-off can be attributed in part to market mechanics. The May futures contracts for West Texas Intermediate, the U.S. benchmark, is about to expire. Most investors are already focusing on the June contract, thinning out trading volume and feeding volatility. UBS analyst Giovanni Stavino said, my apologies, sir, the June futures contract for WTI is trading around $22 a barrel, but that's still sharply lower on the day. Brent crude futures, the global benchmark, fell 8% Monday to $25.81 per barrel. Here's the thing. If we're not using it and we're still pumping it, literally, if we are running out of physical places to store the oil, I'm starting to hear stories about all these like super tankers that are literally filled to the brim right now. It's it's very eerie. It seems like in some cases the barrel itself may be worth more than the oil in it. And there's a number of reasons to this. And where was it? I think it's at the bottom of the article here. Oh, basically, a lot of this is due to uncertainty. There's so much stuff going on in the market that, okay, let's say you have all of a sudden a major shutdown in things. Well, that causes concern. But we've seen a lot of the market itself, as far as investments and stuff, kind of stabilize to an extent because now we're trying to weigh, okay, we have a major economic shutdown, but we also have one of the largest economic bailouts in our history going on. So the market does not like uncertainty, and that's why we see a lot of this stuff going on. As you can see here, it says, oh, pop over to our other screen because, well, this is what we do. Got to get that P ratio. But the broader picture, of course, is complicated. The confusing thing for markets at the moment is the huge dichotomy between what will possibly be one of the worst synchronized global economic slumps in history against what is undoubtedly the largest ever intervention, Deutsche Bank strategist Jim Reed told clients Monday. This is one of those things. It's just, there is uncertainty. The market don't like that. And we see different folks saying different things. A lot of folks want to open right back up. Well, yeah, no, they need their jobs. A lot of businesses are likely going to go under because a lot of businesses, they operate on very thin margins. As soon as you interrupt business for any extended period of time, there's going to be a lot of issues going on here. So let's pop over here to another article as well. And this is brought to us by the New York Times. Because when I first saw this, I'm like, wait, what's going on? And then more and more articles kept coming out. So as we can see, oil plummets as storage capacity runs low, and a quirk in pricing wipes out one benchmark. This is the thing. It's like folks are in economic turmoil. I heard one of my friends, who hopefully I'll have on tomorrow, he trades oil on a regular basis. I don't think he's ever seen anything like this as well. So as you can see, look at this. Okay, so you get January, February, March, April. It's around, what, like 50, 60 bucks a barrel, and starts going down, going down. We're at 20, and then today it dropped from like 20 down to a penny. So it had hit $1, it hit a penny, and now you've got prices that are literally negative. What does that even mean? I don't know. Does that mean if you get a semi-truck, you can literally just they're gonna pay you like 37 bucks a barrel to just take it, just haul it, just store it there? I remember some of you folks may have seen that skate park that was filled in with sand because we didn't want kids skating it. You don't want kids skating in it. You probably could have filled it up with some bubbly crude. That probably wasn't been a good idea because it's right on the beach, and we got to think about the environment. So these are other factors as well. But as we can see, as we continue on with the article here, the bizarre movement in the market on Monday was exaggerated by a quirk in the way oil prices are set. Traders pay varying prices depending on the grade of crude, where it comes from, and the date on which it's meant to be delivered. Normally, these differences are small, and they go unnoticed outside of the energy market, but on Monday, they were exacerbated by sharp swings in the price. A benchmark for oil, though, be delivered next month, went negative, meaning it was essentially deemed worthless, suggesting that people who had oil to sell were willing to pay for it to be taken off their hands. Oil that is scheduled to be delivered in June, more reflective of the market's view on what the value of crude is right now, also fell, sliding 16% to about $21 per barrel. And as you can see, they go on here saying the problem is that the United States has run out of places to store its oil. President Trump filled up the strategic reserve. I mean, should we expand the strategic reserve? I don't know. I've never seen anything like this before. I mean, I still remember when I was a kiddo in school, it's like, I remember some of the morning things, and like oil was like $28 a barrel. I'm like, oh, that seemed pretty good. That was also like, I don't know, 20 years ago as well. So as you can see, we also have broader worries also growing that the deal reached on April 12th between organizations of the petroleum exporting countries, Russia, and other producers will not be sufficient to prevent oil markets being overwhelmed with record surge of surplus oil. With much of the world in lockdown because of the coronavirus pandemic, global demand for oil has collapsed, leading to record surpluses And as we can see, we have a nice little ad for physical gold and silver here, which even if you start looking at some of those things, you're seeing a lot of them out of stock. I'm seeing, was it a 5 ounce gold bar? Was that over $9,000? Um, I'm seeing certain coins going for upwards of around $2,000 an ounce per minted coin as well. So it appears that precious metals are starting to go up, or at least gold is. Um, let's continue on. The numbers explained why investors are worried. Under the terms of the arrangement brokered by President Trump, Saudi Arabia, Russia, and other countries will cut 9.7 million barrels a day in production. Beginning in May, analysts forecast that oil consumption in April will fall by about 3 times that. And as you can see, you have different experts going along saying this is not enough. Um, this is something that I have never seen in my life here. It's just all of a sudden it's like, okay, you have a commodity. They're essentially, at least based upon what the market's saying that please take this off our hands. And my response is, Nani? What's actually happening here? These are unprecedented times, and now we're seeing that a lot of the systems we had in place, they don't necessarily seem to be perfect. I mean, is the oil worthless? I mean, of course it's not worthless, but apparently it's fallen into negative territory. So what's going to happen? I have no idea. I'm not a financial expert by any means, but I just wanted to present you folks with this to just kind of maybe have it as something to think about. Keep in the back of your mind. Um, Again, we saw the great toilet paper shortage of 2020. A lot of places are now basically to the point where, well, they are limiting your usage, basically rationing it, if you would. Basically, you get one package per customer. And a lot of times it's like the smaller packaging as well. So in current year 2020, it seems like oil prices have plunged and toilet paper prices have skyrocketed. Welcome to the Roaring Twenties, everybody. Thank you all for watching. Peace out, and long live the elbow bump.